Hey, this is Justin with daytradethemarkets.com. It's Wednesday, January 3rd. Wanted to do a quick video here on a trade we talk about every now and then. It doesn't happen all that often, but when it does, it can be a pretty good one. We call it the runaway gap trade. Might be something, like I said, it doesn't happen all the time, but it could be something you could add to your toolbox. A couple things. It is an aggressive trade. It's not, it's not one of these where you're looking at 70+% winning percentage. Just more like a little bit better than a coin flip. But the thing about it is that when it does work, it tends to be a pretty good move. Okay, let me just give you an example here. I'll look at the crude oil, the Nasdaq, and the ES because they all were the same. The idea here, we had a buying gap. This is crude oil. We had a buying gap here, and what we're looking for three things to line up. Okay, we want our big picture bias to be in the same direction as the gap, and we want the first strong or extreme aggression bar to also be in that direction. So if you get all three of these things lining up, it's a pretty good scenario. So in other words, in crude, for example, we had an up big picture bias heading into the day, okay? And then we had an up gap, okay, a gap to the upside. Those are both bullish things, potentially. And then, to cap it off, one thing, it could be a gap fill, which would likely attract some good selling. But when the first major aggression bar that we see, in this case, is a level 2 or a strong aggression bar, buying aggression bar, it's telling us that, again, those three things are lined up. We had the big picture bias up, the direction of the gap is up, and the first strong or extreme aggression bar is by the buyers. So it's a pretty, it doesn't happen all that often, but when it does, it's a pretty good trade. And basically, you just jump on when this bar forms. Your stop is a few ticks below the low of that bar. You're trying to hold on until you see signs that there might be some trouble, which maybe would be in here. Now, I know it did move higher later in the day, but that's the idea. Same idea here. If we look at the, let me pull this over. We look at the ES. We have a situation here where, again, we're looking for three things. We're looking, in this case, because the gap is up, we're looking for the big picture bias to also be up. We know the big picture bias going into the day. And we're looking for the first strong or extreme aggression bar to be to the upside as well. So, and by the way, I've stripped away all my boxes and things. I just wanted to focus on this particular trade early in the day. We have an up bias, big picture. We have an up gap. Our first major bar of the day is a green, or what we call level 2 or strong buying aggression bar. This one's a little trickier because it's right into the all-time high prior to today. Obviously, we made new all-time highs today, but that's a little bit of a more difficult place to get on to trade. Certainly would have worked. I think that's worth potentially passing on in the ES. The NASDAQ, same idea. Again, we have a situation where the big picture bias is up, the direction of the gap is up, and the first strong or extreme aggression bar is made by buyers. In this case, it was also a level 2 or a strong aggression bar right there. And so this one obviously took off pretty nicely as well. So again, not going to get into any more detail than that today. I just wanted to show it's a trade that maybe happens a couple times a month, but when it does, it can be a pretty powerful trade. It's not for everyone, but it's for more of an aggressive trader, and maybe you can add that to your toolbox. So hopefully you found that helpful, and we will talk soon. Thanks.